Hello folks, welcome back to the channel. I am your host, who of course is a host. And today is April 13th, 2026. So, what is big about today? Well, we have two dominating topics that we're going to get into, right? We only have two. Normally I would do 3 or 4, but I am very low on time. It is 5:45 p.m. Whew. Low on time and I'm late. Usually I start at 3 or something like that. But anyways, the first big major topic that's making headlines right now is one, the RWA tokenization push, which is Ondo and the SEC. So a major story today involves Ondo Finance seeking SEC clearance for a new tokenized equities model, right? And so this reflects a broader 2026 trend where paper assets like stocks and bonds and even gold are being moved onto the blockchain. And so why it matters is that unlike the speculative meme coin cycles of the past, it's focusing on institutional grade utility, which I've been mentioning in previous videos, which are now essentially irrelevant now. I mean, the information on the previous videos are good, but like they're very time based. So if you didn't see them, there's no point in sending you back to see them. Unless you know nothing about crypto, then I made a crypto for dummies video and a blockchain for dummies video on what it was. But anyways, while Bitcoin faces volatility due to geopolitical tensions as everyone wants, which I covered a little, but we're not going to cover today, capital is rotating in WA infrastructure projects as investors look for fundamental value rather than just hype. And then the second topic we're going to get in today is the Aave Will Win government shift, right? As the Aave DAO recently passed a landmark proposal that is being debated across the industry today. And the proposal, titled Aave Will Win, directs 100% of the protocol's revenue directly to Aave token holders, right? Now, it's spelled A-A-V-E. I'm pronouncing it Aave because, like, when you say Aaron with a double A, you say air run. So it's like it's like that it sounds like. It's Ev. That's what I was thinking. It's like Ev or Ave. But anyways, so the significance is that it marks another major turning point. This it's already a huge turning point, right? But it's another major turning point for DeFi, which means decentralized finance. As for years, many protocols struggled to link their success to token value, right? And Aave's moved toward a sustainable accrual, right? And the model is being watched as a potential blueprint for other major players like Sky, which was formerly Maker, and Uniswap. And so the market impact is that this has sparked a DeFi yield optimization cycle, where with investors looking for protocols that offer real cash flow rewards rather than just inflationary printed tokens. And just some other, before we get into these two topics, two other honorable mentions is that Solana, SOL, is seeing high volume and selling pressure near the $80 support level, and also as the network prepares for its upcoming AlphaGlow protocol upgrades. Additionally, there's also the AI integration, as tokens like FET and TAO are trending as high beta assets, often outperforming the broader market whenever new AI infrastructure breakthroughs are announced. So those are just, if you want to check those out, you can probably do your own research. We're not going to cover topics on that today. As I said, I'm very late on time, and I'm exhausted, if you know what I'm saying, so I'm going to try my best here. But anyways, getting it up. Anyways, we're going to expand on the first topic, and so the move toward RWA tokenization is being described by market analysis today as the institutional era, which I've mentioned in previous videos of crypto. And so while previous years focused on the digital native assets like Bitcoin, 2026 is about moving the $100 trillion traditional finance market onto blockchain rails. So, number one, there's the Ondo Finance No Action Request. So, basically, the biggest specific headline is Ondo Finance filing a formal no action letter request with the SEC. So the goal is that Ondo is seeking regulatory assurance that using public blockchains like Ethereum and Solana to record and settle tokenized securities such as U.S. Treasuries and Equities is legally compliant under current U.S. law. And so the impact is that if the SEC grants this, it would allow a green light to be made for Wall Street. So essentially, it would allow institutions to trade tokenized versions of, per se, NVIDIA or Apple stock 24/7 with instant settlement, removing the traditional T+1 2-day waiting period, right? And then there's also the scale, which is there's the $30 billion market and growing. As the total RWA market this week has hit a massive milestone that's now valued at approximately $29.22 billion. And the U.S. Treasury is leading this way, as tokenized Treasuries account for nearly $14 billion of that total. And there's also key players like heavyweights like BlackRock, by their Build Fund, and Circle are primary drivers as well, turning what used to be experimental tech into a standard institutional product, right? And then number 3, there's the composable finance primitives. As a lot of the conversation has shifted from simply putting an asset on chain to making that asset useful, right? So there's a lot of collateralization. As today, you don't just hold a tokenized bond; you can use it as collateral to, per se, take out a loan in a DeFi protocol like Aave, right? And so there's this Paris consensus, as following the Paris Blockchain Week that concluded recently, the industry is moving toward operational reality to essentially, how do I put it? Well, essentially, it means that tokenized assets are now expected to behave like real financial tools, priced in real time and liquid enough to be traded at the moment's notice, right? And so why it matters for the average user is that in the past, high-yield institutional products like private credit or specialized treasury funds were locked behind accredited investor walls. And though tokenization, these were essentially becoming fractional size. As an example, today, my Ether wallet, MEW, launched a campaign using Ondo's infrastructure to give away tokenized shares of US equities to retail users, signaling that these institutional tools were finally reaching the everyday wallet. And so the bottom line is that today's news isn't really just about a price pump. It's about the plumbing of global finance that's going on right now and is being rebuilt on blockchain. So essentially, well, Bitcoin, and as an analogy, Bitcoin is usually seen as digital gold, right? And so RWAs are becoming the digital certificates for everything else, essentially. And so what could all this mean? Well, it really, the news on Ondo, Finance, and the SEC today, it really represents a fundamental shift in how the world's most valuable and even invaluable assets are tracked and traded. So, the death of the T+2 settlement, right? And so, as you should know, or maybe you don't know, in the traditional stock market, when you buy a share of, per se, NVIDIA, it actually takes 2 business days for the paperwork to settle behind the scenes. And this is known as T+2, right? And so what it means now is by using, per se, the Ethereum mainnet as a record-keeping tool, settlement can become atomic, aka instant, right? And the no-action request is essentially that Ondo is asking the SEC for a safe harbor to say, we are still following all of the old rules, we're just using a faster digital ledger to do the bookkeeping. If approved, it removes the multi-day waiting period for moving money and stocks, right? And then number 2, there's a 24/7 global market, as traditional stock markets close at 4 p.m. and stay closed on weekends. Crypto never closes. And the implications that tokenization allows a trader in Tokyo to buy a tokenized entitlement of a U.S. Treasury bond at, per se, 3 a.m. in the morning on a Sunday. Because why not, right? And so why that's big today is that, according to data from RWA.xyz, tokenized RWAs have just hit $27.65 billion in value. And it's not a niche experiment anymore, as a lot of things haven't been. It's essentially a structural migration of capital, right? And it's going to be said a lot, it's going to be mentioned a lot, how these things are going out of experimental and we're going to an institutional area, right? Because it's so big and it's so important to watch right now. Because everything that's happening, it all links together, sort of like a blockchain, as very nicely said. Like the big thing that's defining everything, incrementing speeds, is exactly the analogy we need. All of this stuff that's to do with crypto, the SEC decision, what do you call it? What was it? I forget the name of it. It was a something act. Was it what? It wasn't the Capital Act. But it started with a C. Anyways, there's an act going through the SEC about crypto regulation. All of this is interconnected, and it's defining a new era for really, I'd say finance as a whole, if you ask me, because after this goes for crypto, everything's just going to follow suit, right? If you ask me. Remember, I'm not a financial advisor, so you shouldn't take my advice, but that's my opinion. So, really, it's sort of like the Renaissance, right? You have all this building and engineering and innovation that's going on within the financial world. And so it has to be mentioned that this is going to define a new era. It has to be mentioned that it's no longer an experiment anymore, because originally that's essentially what it was. It was really just hype and experimenting on this, and oh, we hit big, or maybe a meme coin just scammed you and you didn't, right? That's what experimenting was. But now people are getting, this is all becoming like smart money. They're realizing what to do, what not to do, how they're doing, and they're taking things very seriously. Things are less going off based off of hype, and they're going off of actual statistical analysis, right? And so yeah, there's nothing else I have to say on that. I expanded too much. Anyway, so number 3 of this is that there's programmable money dividends. As because these assets are now on the blockchain, they can be programmed with smart contracts. So instead of dividends, instead of waiting for like a quarterly check, a company could program a tokenized stock to pay out micro dividends every single minute. And there's this collateral efficiency, as today's news highlights, that you can hold a tokenized US Treasury bond and use as collateral for a loan instantly, without ever needing to sell the bond or talk to a bank officer. And there's this democratization versus a street name. As currently most people don't technically own their stocks, their broker holds them in street name, right? And so the shift is that tokenization moves toward a direct registration. You hold entitlement in your own digital wallet. You have more transparency into exactly where your asset is at any given second. And so, while it sounds like a crypto win, it's actually a hybrid win, right? Because Ondo's specific filing today is designed to keep the existing legal protections like the DTC indirect holding system intact. So it's not because crypto's trying to move away from the system, right? That's the whole point. There's no middleman, can't be controlled by the government. No middleman can't be controlled by the government. It's our money, we see it. And essentially trying to get away with the system, right? But Ondo's filing keeps the old legal protections intact, right? It doesn't really move away from it. And so the takeaway is that we're moving from a world where crypto and finance are two different things to a world where blockchain is simply the high-speed internet for all money, right? And that's gonna officially end for topic number 2. And topic number 1. And we're gonna get into topic number 2, right? And that is the shift in DeFi revenue models, which is exemplified by Aave DAO's Aave Will Win initiative, right? And it is sparking a massive debate today because it addresses the original sin, right, of decentralized finance. Tokens that have high utility but no direct financial value for their holders, right? So here's the governance of why this breakdown of why this governance is going to be a game changer essentially, for the most part, right? So 1, there's going to be the end of valueless governance, right? So for years, many DeFi tokens were strictly used for voting. While you could vote on protocol changes, the actual fees generated by the platform, which is millions of dollars, often just sat in the treasury or were used to pay developers, right? And so there's going to be a change, as the Aave proposal seeks to activate a safety module update that would direct 100% of the protocol's net revenue generated from lending and borrowing fees directly to Aave stakers, right? And so the result is that this turns Aave from a simple voting chip into a yield-bearing asset. As in traditional finance terms, it's the equivalent of a company moving from reinvesting all profits to issuing a consistent dividend. Number 2, there's the fee switch phenomenon. As Aave isn't alone, today analysts are watching the fee switch trend across the board, right? And so there's, like, for instance, Uniswap. After years of delay, Uniswap is nearing a similar move to reward Uni holders with a portion of trading fees. There's also Sky, which was formerly MakerDAO, right? Or DAO. And they are restructuring their engine to ensure that the success of the stablecoin USDS directly fuels buybacks or rewards for the government's token. And so the logic is that if the platform is successful, the token holders should be the primary beneficiaries. Then number 3, there's a focus on sustainability, right? As in 2021, crypto cycles, many projects offer yield by just printing more tokens, inflation. In 2026, the market is demanding real yield, right? So essentially, it's like we're not actually getting we're not getting value out of our buck. You're giving me $5 that are new to the system, and you're devaluing my dollars. So my $5 are no longer equivalent to 5 rupees. They're going to be equivalent to 4.5 rupees. Yeah, as an example, right? And so the market sentiment today is that investors are rotating out of inflationary coins and into protocols that actually show actual cash flow. And the competition is that because Aave is the largest lending market in crypto, their decision sets the risk-free rate for the rest of DeFi. And if Aave pays out 5 to 8% in real revenue, other protocols must match that to stay relevant, right? And so what it means for the ecosystem is that there's going to be this token value accrual, as it provides a fundamental way to value a token using traditional math, like a price to earnings ratio, right? There's increased security, as by rewarding stakers with real revenue, more people are likely to lock up their tokens to protect the protocol, making the entire system more resilient against attacks. There's also going to be regulatory scrutiny, right? And this is the risky part, as by paying out revenue, these tokens would look more like securities to regulators. And the Aave Will Win strategy is a bold bet that the protocol is decentralized enough to survive this legal classification. And then it's trending today, obviously, because data from Token Terminal shows that DeFi protocols revenues are hitting at 2-year highs this week. And with the fee switch being flipped, that money is finally moving from protocol treasuries into the wallets of individual users. Now, what could all of this mean? We are going to get into that. So, the shift toward real yield, right, and revenue sharing models marks a transition of DeFi from its experimental Wild West phase into a mature financial sector, right? And so, the cryptos gets the P/E ratio, right? So in the past, value in a crypto token was mostly guesswork based on hype, right? So if a token doesn't do anything except let you vote, it's hard to say if it's worth $10 or $100, right? And so the meaning is that when protocols like Aave start paying out revenue, we use traditional stock market math, and you could look at the protocol's annual earnings to determine a fair price based on yield, right? And this makes the market less volatile and more attractive to rational investors who want to see a return on their capital. And there's also this end of Ponzi-nomics, as early DeFi relied on liquidity mining, giving away new tokens to attract users. And this worked until the new tokens ran out, causing the price to crash. And so by using actual transaction fees from people borrowing money or swapping tokens to reward holders, the system becomes self-sustaining. It means the protocol is a real business that generates value, rather than musical chairs game of printing new coins, right? And so number 3 is there's the institutionalization of governments, right? And so if a token means you get a slice of protocol's millions in revenues, those votes become much more valuable. And so we're seeing governments' wars. Large funds and institutions are buying up these tokens not just for the price appreciation, but to control the on-chain cash flow. And so this could lead to more professionalized and perhaps more corporate version of DeFi. Number 4 is that there's a regulatory battlefield, as this is essentially, for lack of a better terminology, similarly, it's essentially the dark cloud on the horizon for this trend. Because traditionally, the SEC and other regulators argue that if an asset's value comes from the efforts of others and it pays out a profit, it is a security, like a stock. By flipping the fee switch, these protocols are essentially daring regulators to come after them. It means the next few months will likely see high-stakes legal battles, and will define whether decentralized code can legally pay its users. So that's going to be huge. It's probably going to be huge news, unless, of course, Aave. Unless, of course, Aave gets their proposal, Aave Will Win out, and it actually gets accepted. If that happens, then we'll probably see good things happen, right? But if not, there's going to be a lot of legal battles. And so that's going to end for our topics today. The sources that we got our information from was RWA tokenization and Ondo, DeFi revenue models in Aave. So Ondo Finance official blog, RWA.xyz, KuCoin and Binance News, Aave government's portal, snapshot, CoinMarketCap and Crypto News, Token Terminal, Foresight News, MEXC News, and DeFi Llama, our usual sources. So anyways, I hope this information was helpful. You remember, I'm not a financial advisor. I'm simply your host who is a host. I hope this was helpful. Remember, this information, what you do with it. You should always fact check everything, but I'm pretty sure my information is 99% correct. Yeah. And I gave you the sources just now, in case you want to see them for yourself. So yeah, I hope you enjoyed, and I will hopefully